Good morning all and welcome to this morning's video. So I have nothing on watch today because the market is looking pretty awful across the board. It looks like it needs more development. So I'm just going to bring you a quick trade recap on pound Kiwi just to say that I took a loss on this pair yesterday. Very happy with the trade, wouldn't do anything different. Once again, it is a loss. And what people will do is they'll go, what happened? What went wrong? What did I do wrong? Well, you didn't do anything wrong. As I said in the previous video, if you stuck to your rules. If you didn't stick to your rules, then you've got work to do. But anyway, let's break this down. So on the higher time frames, as I said yesterday, you'll be familiar with what I said yesterday. Nothing changes about how I analyze pairs based on the outcome of one trade. If my sample size, if a large sample size of trades tells me that certain things are not working, then we change the way we look at things, or we change certain aspects of our trading plan, but not on the sample size of one, that's for sure. So we have this high here. We have the 1, 2, 3 leading into that. The first thing that stands out to me is the fact that we didn't break the high, but we don't necessarily always need to. We also have this structural approach there. We don't always need to break it. And if we do break it, we don't always break it straight away. We can see that we have impulsive momentum and that we are trading back below this high and below here. So that's not necessarily, not all highs are broken, and not all of them, if they are broken straight away. So we do have to factor these things in. We do have the push down and the correction afterwards. So because we're now back below these highs, this seems plausible for a possible impulse correction continuation to push lower, perhaps down to this low or there. And then maybe after that, then we get the push up to give us that kind of structure. And maybe this becomes the middle section to push back up, to give us that, to break the high. And then maybe we see longer term moves from there. We don't need to know what is going to happen next to make money. And we don't need every trade that we place to make us money either for us to make money. But if you're not thinking probabilistically, then that is difficult for a lot of people to grasp. One thing I like about this is we had the solid weekly close last week, okay? And it seemed logical to me to conclude that, especially when we're trading below all of this price action here, all of these wicks, that we would likely follow through down to here and potentially move a lot lower, okay? As I drill down a bit, I can see before I've even drilled down, what I like about this is the fact that I can see that we have this 1, 2, we have a bit of these swings here, these violent swings, and then we have this price gives us more settled price action, okay, where we have this high here and we tap into it by way of a 1, 2, 3 reversal structure with a slight expanding nature to it, okay. Euro Kiwi in particular is famous for giving us these expanding patterns, and pound Kiwi moves very similar to Euro Kiwi, being the sister pair, so it doesn't surprise me that we get an expanding pattern leading into an area of value, particularly when that area of value is sharp. You can see that we followed through, so we had this impulse correction continuation. The previous daily was trading below here and below all of these lows, okay, so that seemed likely that we would follow through to the downside. We also had a bit of a wick above, suggesting a liquidity grab up there. Okay, it was a little bit of a wick below, but nothing's perfect. As we drill down, you can see that we have this is more prevalent. I like the fact that even on the 4-hour chart, you can kind of see this structure here. It's 1, 2, 3, leading into what is on the 1-hour chart an area of value here, a little hook point, and the fact that we were potentially retesting the back end of this. I like the fact that we had a gap to that low, making it more likely that we would come down to take out that low that we near missed to. I like the fact that there's an element of a running channel to this, where we get these slightly more steeper swings, okay? And then we get a flatter correction at the end. Often these drop out, okay? So I'm factoring in all of these things. As we drill down to the 1-hour chart, you can see we have a sharp hook point, which is often where the liquidity is sat, okay? Especially the clue is often when we get the reversal structure leading up to it, especially when the first and second touch fail to tap into that hook point, okay, and the third touch does, and then we have that middle section there. I like the fact that we have a more impulsive move up, a corrective move down, and then a more impulsive move up. I like the fact, okay, my internet has just gone, so bear with me. I like the fact that we even have a 1, 2, 3 last leg. Okay, it's not working now for some reason. I'm not able to, I don't know what's going on here today, but this is crazy. Right, wait a minute, bear with me. Okay, something really strange is happening with this computer at the minute. So bear with me, folks. It's not letting me undo stuff. Right, there we go. On the 15-minute chart, we also have a hook above. We also tap into that. So this was very deliberate for a move to the downside because we had the 1, 2, 3 reversal structure, which tapped into a hook point, which also tapped into this, which also retested the back end of this and this. Okay, so if price taps out all of that liquidity and still doesn't commit to the downside, it's likely not the trade you think it is, and then you should probably just walk away. Okay, so I got in here. Okay, entry just below this retrace candle there. We had the kind of evening star formation about that, and then if we just play this forward, so some people ask me, would I be moving my stop loss to break even? Okay, around about, where was it? Around about here. And I said no. And the reason I said no is a good question. I can't remember who asked me that within our private community, but it was a good question all the same. And one of the things I said no. And the reason I said no is because one, the spread on pound Kiwi is quite high, and it's a pair that tends to mess about for quite a while before it actually commits in one direction or the other. So that's one reason I give it more room. There was other factors at play, such as the fact that this was a fairly small structure, and with fairly small structures, I tend not to move my stop loss to break even until we're near the bottom of the structure, just because these pairs can, as I said, mess about, tag you out and drop. And as I was saying to my partner, literally just before this gentleman asked me the question, one thing I've noticed is that when you move your stop loss, when you're a little bit too keen to move your stop loss to break even, what I've noticed is that whether you're in the trade or whether you do that or whether you don't, price will often scoop up to where your entry price is and drop. Okay, regardless of whether you've moved to break even or not. And that tells me one possible theory I had for that is that it'll often wick up to there and then drop. And one of the reasons it likely does that is because many people moved their stop loss to break even too early, and that pullback was actually these people getting tapped out of their positions before the move to the downside. So I left the risk on the table, and I also said to this gentleman, the majority of the time this happens, but as I often say, nothing happens all of the time and nothing happens none of the time. And I'm not interested I'm not interested in this instance on what happens a minority of the time. I'm interested in what happens in majority of the time. Okay, so we started to pull back, and I left this open. And one of the reasons I said I wasn't moving to break even though it started to pull back, is because I said that price had no business coming back up to test these highs, which is what was suggested, and plausibly so. Because if price has tapped into this by way of a reversal structure and the little hook point on the 15-minute chart and retested the back end of this and the back end of this, then if this doesn't play out, then it's likely forming something more complex. Okay, so price had no business necessarily coming back up there, and people will say, yeah, but it did come back up there. Yes, and nothing happens all of the time and nothing happens none of the time, because there's always unknown variables at play which you can't account for. Okay, if every variable was known, then we'd all be millionaires, wouldn't we? So okay, so the price started to push down. I left it open here. Okay, see, I'm not, even though I took a loss on the previous trade, I'm not affected by my losses. So I'm not afraid to leave the risk open if it makes sense for me to do so. I saw this little structure here. So we had this this 1, 2, 3. We tapped into the hook point. We pushed down. Even here, we had that little hook point there. We tapped into that by way of a reversal structure. And I thought that perhaps we would commit from there. If we didn't, I don't care. I'm not bothered. I'm just doing what I've been taught to do. And if it plays out, great. If it doesn't, I'm not bothered. Okay, so I think at some point I was taken out during swap hours by the spread. I think we were down here, and I decided that because there was a there's about 80 pips, I think 80, 90 pips between here and my stop loss. I decided that that was enough room for price to consolidate through swap hours. And because of that little mini 3-touch that tapped into that, potentially dropped from there. But price did a handbrake turn and rocketed in the other direction. Okay. And if we just zoom down, so I was tagged out during swap hours at some point there. Now, this is likely not the trade we think it is now. So this, I already can see by this that this is likely getting complex. Okay. And I don't want to be getting involved in here, even if some people might be thinking, well, what if we got a, what if price consolidated under here? Okay. Well, first of all, I want to be able to manage this position to a major low such as that. Okay. And if we were to size something like that up, I would only have, potentially about, it's getting difficult now, because one of the things I have to factor in when I'm factoring in the risk parameters, and you can see this is already pushing up, is can I manage it to the lows? Now, yesterday I worked 17 hours and it's becoming increasingly common that I'm working between 16 and 18 hours per day. So I'm not always around. With a trade like this, I've got more room to manage it to the low to get my risk off the table if I'm doing other things, if I'm picking medication up for my partner, if I'm replying to messages. I've had a lot more messages since I became a funded student, and I do enjoy those because I like the accountability of those questions, because by people asking you questions, and people do ask good questions, it forces you to ask yourself good questions. So you have to justify your decision making, uh, which I like. But nevertheless, my toilet has just packed up as well now, so I've got to sort that out. So these things are happening on a daily basis now, and I can't be around a lot of the time to manage these positions. So even if we did form something like this down here, especially when price often gets 90% of the way and then pulls back, which is why we use the mechanical management tool, I wouldn't be able to manage this down to the lows anyway. So I'm not interested in any trades down here. But to me, this looks like it's becoming way more complex now, especially, we do have to factor in things like that we've had a bit of a scooping nature to it. So this might just be in another sequence of scoops. Okay, maybe we get something, we end up with something more like that, which gives us another middle section, which pushes down, which taps into that low by way of this. Okay. And then we push up. Maybe we tap into that hook point, react from there, push down. Who knows? I'm not going to try and guess. All I know is that what I'm looking for from the pairs that I've got on watch needs more development. All I know is I'm very happy with how I placed this trade and managed it. And hopefully you've taken some value from this. And of course, when the next entry or entries look like they're ready for me, then I will be ready and waiting to execute. As I said, what many people will do is they would have taken the loss on the previous trade that I took. They would have looked at this and thought, nah, it's not for me. It doesn't look right. And what they're doing a lot of the time is just staying out of positions due to the fact that they were affected by the previous loss. And it's taken me a hell of a long time to not be affected by a previous loss to the extent that I can execute on a trade like this without the previous loss, being factored into my decision making. So just food for thought there, because another thing I thought about yesterday is the fact that this is, in a nutshell, this is the vicious cycle of trading. People will take a loss on the previous trade that I took. They won't take this trade, and then this trade plays out and hits the target down there that I was talking about in yesterday's video. They're then affected by that because they think, oh man, I should have taken that, but I didn't because I was affected by the previous loss. Then they FOMO into another trade, which they shouldn't have done because they missed out on the 7 or 8%. Then that ends up being a loss. And I think you can see how the vicious cycle actually continues. So we don't want to go down that rabbit hole. And that's, in a nutshell, how psychology, one of the ways in which psychology works. Anyway, folks, I thought I'd just try and go into a little bit more detail as to the thought process behind this trade, why I placed it the way I did, why I managed it the way I did, and hopefully I can continue to provide you with some value. Have a great day, folks. I will see you again in the next video if something is ready and waiting or looks like it's likely to shape up tomorrow. But for now, have a great day, and I'll speak to you again soon. Adios.